The CRAW is sitting on a refund check that could be worth up to $40,000 to you, and the only reason you haven't received it is because no one ever told you to ask. If you're 60 or older, living anywhere in Canada, Ontario, Alberta, BC, Quebec, the Maritimes, the Territories, it does not matter. I need you to put your phone down, sit up straight, and listen to me for the next few minutes, because there is a credit hidden inside the Canadian tax system that is quietly paying lump sum refunds of $10,000, $20,000, even $40,000 to seniors all across this country. And the brutal truth is this: most of the people who legally qualify for it have absolutely no idea they do. They think this credit is for people in wheelchairs. It's not. They think you need to be bedridden or severely ill. You don't. They think their doctor would have told them. Their doctor didn't. And every single year that goes by without applying, you lose another year of retroactive money the federal government already owes you. Stay with me, because what I'm about to explain could change your retirement. Here is why almost nobody knows about this. The Canadian tax code is genuinely thousands of pages long. Most accountants are too busy filing returns to dig into rare credits. Doctors are trained to treat patients, not to fill out tax forms. And the Canada Revenue Agency does not phone you up to say, hey, by the way, you qualify for tens of thousands of dollars. It is your responsibility to find out, and almost nobody does. And when I tell you the kinds of common, everyday medical conditions that can qualify you for this credit, you are going to want to pause this video and call your spouse, your sibling, or your parent immediately. The credit I'm talking about is called the Disability Tax Credit, DTC for short. It is a non-refundable federal tax credit administered by the Canada Revenue Agency, and as of 2025, the federal disability amount sits at $10,138 per year, and that's just the federal portion. Every province adds its own matching credit on top. When you combine the federal and provincial amounts, an approved senior can recover roughly $3,000 to $4,000 in taxes paid every single year. And here is the part nobody talks about: the disability tax credit can be claimed retroactively for up to 10 years. Read that again. 10 years. That means if your condition has existed and significantly affected your daily life for the past decade, and you've never claimed it, the CRAW will issue you a lump sum reassessment cheque that can total $30,000, $35,000, even up to $40,000 deposited straight into your bank account. Now here's where seniors get tripped up the word disability. Most people hear that word and picture someone in a wheelchair or someone who can't leave their house. That is not what the CRAW means. The CRAW's definition is based on what they call a marked restriction in a basic activity of daily life things like walking, hearing, seeing, speaking, dressing, feeding yourself, mental functions, or eliminating bodily waste. So let me give you the kinds of real conditions that approve every single day. Severe hearing loss, even with hearing aids. Vision loss not fully corrected by glasses. Difficulty walking even a block without stopping. Type 1 or insulin-dependent type 2 diabetes requiring life-sustaining therapy. Early stage dementia or significant memory decline. Severe arthritis that limits dressing or grooming. Chronic bladder or bowel conditions. Parkinson's, MS, COPD, sleep apnea with significant impairment, the list goes on. Imagine a 70-year-old man in Saskatchewan who has worn hearing aids for 9 years and has type 2 diabetes on insulin. He has never filed for the DTC. He could be entitled to a retroactive refund of more than $30,000. But here's where most people lose this money entirely, and I need you to pay close attention, because this is the mistake that costs Canadians thousands every single year. The trap is this: even if you eventually do apply, the CRAW's 10-year retroactive window is a rolling clock. It does not pause and wait for you. Every calendar year, you delay. The oldest year on that retroactive period falls off the edge and is gone forever. That means a senior who could have received a $35,000 lump sum if they applied this year might receive only $31,000 if they wait until next year, $27,000 the year after that, and so on, until eventually there's nothing left to claim retroactively at all. That is real money gone because of paperwork delay. And then there's the second trap, which is even more painful. A huge number of seniors do not apply because their family doctor told them, in passing, "Oh, I don't think you'd qualify for that." Here's what you need to understand. Many family doctors have never filled out a Form T2201 in their entire career. Some of them genuinely don't know what the CRAW criteria are. Others are simply too rushed in a 10-minute appointment to assess it properly. Their offhand opinion is not a CRAW decision. The only entity that decides whether you qualify is the CRAW itself after reviewing the completed medical form. And the third trap is what I call the "I don't owe taxes, so why bother" mistake. Some seniors assume that because their income is low and they don't pay much tax, the credit is useless to them. Wrong, completely wrong. The DTC can be transferred to a supporting spouse, common law partner, child, or even a grandchild who helps support you financially. That means even if you personally never recover a dime, your family member can claim it on their tax return and receive thousands back. That refund can quietly cover your medications, your groceries, your home care, your property taxes. Over 10 years of missed claims, that is enough money to genuinely change the financial picture of an entire family. The good news is, this is completely fixable, and you can start the process today from your living room with one form and one appointment. Here's exactly what to do, step by step. First, go to canada.ca and search the words disability tax credit. That brings you straight to the official CRAW page. Do not pay one of those private companies that charge 30% of your refund. The application is 100% free if you do it yourself. On that page, you'll find Form T2201, the Disability Tax Credit Certificate. Download it or use the CRA's new digital application through your My Account portal. Second, book a regular appointment with your family doctor, nurse practitioner, audiologist, optometrist, or specialist, whichever one treats the condition that affects you most. When you book, tell the receptionist clearly, "I need the doctor to complete a CRAW Form T2201 for the disability tax credit." That way, they allow extra time in the schedule. Third, before that appointment, write down on a single sheet of paper exactly how your condition limits your daily life, how long it takes you to walk a block, how often you cannot hear conversations at a normal volume, how many times a day you manage your insulin, how often you forget appointments or medications. Be specific, be honest. And do not downplay your symptoms. Many seniors instinctively minimize how much they struggle. That sheet gives your doctor the language they need to complete the form accurately. Fourth, once the form is submitted to the CRAW, processing usually takes between 8 and 16 weeks. If you are approved, contact the CRAW at 1-800-959-8281 and specifically request a reassessment of your previous tax returns going back up to 10 years. Use those exact words, reassessment, for previous years. That is what triggers the lump sum retroactive refund. Before I let you go, there's one more thing almost nobody mentions, and it could put another $2,400 a year into your pocket on top of everything else. It's called the Canada Disability Benefit. This is a brand new federal monthly payment that officially launched in 2025, and the very first eligibility requirement is, you guessed it, approval for the disability tax credit. The benefit currently pays up to $200 per month to qualifying low and modest income Canadians, tax-free. That is $2,400 a year, on top of O's, on top of CPP, on top of GIS, on top of your DTC tax refund. Without DTC approval, you cannot access it at all. And it doesn't stop there. DTC approval also unlocks the Registered Disability Savings Plan, where the federal government deposits up to $3,500 a year in matching grants and bonds, even for older Canadians. It can also qualify your family caregiver for the Canada Caregiver Credit, which can reduce their taxes by another $2,000+ per year. So one form, one appointment, one approval, and suddenly you've unlocked 5 different streams of money. That is the snowball effect of the DTC that no one explains to seniors. So here is the truth, plain and simple. The Canada Revenue Agency is not going to find you. Your doctor is not going to bring this up at your next appointment. Your accountant is probably not going to mention it. The money, the $10,000, the $20,000, the $40,000 that is legally yours under Canadian tax law is going to sit in Ottawa unless you act. Go to canada.ca tonight, search Disability Tax Credit, and download Form T2201. Then call your doctor's office tomorrow morning and book that appointment. That is the single most financially important phone call you may make this year. Because this isn't extra money, this is money you already paid in taxes, that the government is now allowed to give back to you because of how your health affects your daily life. That money is the difference between heating your house this winter without worry, between paying for the medications you actually need, between living independently in your own home or being forced to rely on your kids. You earned every dollar of it. Now go claim it. And if you want me to walk you through the other federal benefits that ordinary Canadians over 60 are quietly missing out on, the GIST supplement, the allowance for the survivor, the property tax rebates, the prescription drug coverage, subscribe to the channel. I cover one of these every single week in plain English, so you and your family never leave another dollar on Ottawa's table again.